Okay, let's just jump right in because something really, really remarkable is happening in the world of finance. We're talking about gold. You know, that ancient heavy metal? It is on an absolutely unprecedented tear, shattering records and leaving a lot of experts scrambling to figure out what on earth is going on. I mean, just to wrap your head around this, the price of gold has skyrocketed by a staggering 80% in just the last year. And get this, 16% of that jump happened in January alone. So this isn't some slow, steady creep. No, this is a vertical climb. It's a huge sign that some really powerful forces are at play here. And you know, this isn't just happening on Wall Street trading desks. This quote here from a vendor in Dubai's famous gold souk just captures the mood perfectly. It's almost like a fever. People aren't even haggling over the price anymore. They're just buying. And that tells you something really important. For a lot of folks, this is about way more than just profit. It's about protection. Right. So all of this frenzied buying has kicked off what a lot of people are calling a new gold rush. So let's really dig in and unpack why it's happening right now and what it really means that prices have just blown past such a huge milestone. So, yeah, gold is stealing the headlines by topping $5,000 an ounce for the first time in history, but it's not the only one at the party. Silver and platinum are right there with it, hitting their own record highs. What that tells us is that this is a broad move into all precious metals, and they're all being pushed up by the same powerful currents. So, what are these currents? What's the big deal? Well, to really get this new gold rush, you have to understand gold's most basic job in the financial world. It's the ultimate safe haven. And that unique appeal, it's more important right now than it has been in decades. So, what even is a safe haven asset? It's actually pretty simple. It's where you put your money when you're worried everything else might just fall apart. It's an investment you expect to hold its value or even go up when markets are shaky. And for thousands of years, gold has been the absolute textbook example of that. Now, for a long, long time, gold's main competitor for that safest asset title has been U.S. government bonds. But here's the difference. Bonds get their value from trust in the government. It's basically a promise to pay you back with interest. Gold doesn't pay you any interest. Its value is just in the thing itself. It's a real, physical asset. And right now, that trust in government promises is fading, which is pushing investors towards something they can actually hold in their hand. And that fading trust, that really brings us to the heart of the matter, the anxiety that is pouring fuel on this fire. It's not just one single thing either. It's more like a cocktail of global worries, all hitting at the exact same time. So what's in this cocktail of worry? Well, you've got renewed fears of trade wars messing with the global economy. At the same time, you've got rising inflation here at home, just eating away at people's savings. Add to that political drama like the threat of a government shutdown and a general sense that U.S. policy is, well, a bit erratic. All of it leads to one big thing: fading confidence in the U.S. dollar itself. And look, this isn't just some vague feeling. You can literally watch specific events move the price. Over the past year, you had strange stuff like the whole Greenland discussion, or investigations into the Fed chairman that just chipped away at trust. A few weeks ago, threats of a trade war with Canada made markets nervous. And just in the last few days, even a potential state government shutdown in Minnesota was enough to make prices jump. The market is on a hair trigger. So, with all this anxiety swirling around, who exactly is doing all this buying? Well, if you're picturing just a few panicked people lining up at the local coin shop, you're only seeing a tiny, tiny piece of the puzzle. The reality is much, much bigger. Yeah, as one analyst put it, this isn't a mad rush. Not at all. It's a very deliberate, very calculated move. People are treating gold as a serious part of their investment strategy, and the buyers are everyone from the world's biggest financial institutions right down to small, everyday savers. And you can see that breakdown right here. Central banks, we're talking entire countries, make up the biggest slice of the pie. Then you've got big institutional investors using things like ETFs, you've got wealthy families looking to protect their fortunes, and yep, that last slice there, that's small investors like you and me. This trend is happening across the entire financial spectrum. The reason why central banks are buying is maybe the most fascinating and important part of this whole story. For countries like Brazil, buying tons of gold is a clear geopolitical move. They're trying to stabilize their own currencies and, this is the key part, make their entire economies less dependent on the US dollar. It's basically a global vote of no confidence. Okay, so this all brings us to the big question, right? Is this whole thing a bubble that's about to burst, or is this the new normal? Let's take a look at what the future might hold for this gold rush. All right, so what could actually stop this thing in its tracks? Well, experts say you'd basically need three major things to happen. First, the world would have to become a much calmer, less uncertain place. Second, U.S. policy would have to become stable and predictable again. And third, you'd need a sharp hike in interest rates, which would suddenly make those interest-paying bonds look a lot more attractive than gold. And this is the really crucial part, those three things we just mentioned, global calm, stable policy, and higher interest rates, according to the experts, they are, and I'm quoting here, nowhere to be seen. Just not on the radar at all. And the big financial firms, they are planning for this to continue. Take Goldman Sachs. They're forecasting that gold will hit $5,400 an ounce by the end of 2026. They don't see this as a temporary blip. They believe the problems causing this are deeply structural. Which leaves us with a really fascinating question to think about. If the problems pushing people to gold are structural and long-term, and the forces that could bring prices back down are completely out of sight, it makes you wonder, are we really watching the peak of a gold rush, or are we just watching it get started?